This is a stock analysis blitz for Endeavour Mining. Endeavour Mining are a gold miner listed on both the London Stock Exchange and the Toronto Stock Exchange. Please remember that I do these videos only for fun as a hobby and always speak to a qualified financial advisor before making any investment decision. Endeavour Mining operates in Africa, and as you can see, their reserves are currently based in Senegal, Burkina Faso and Ivory Coast. Actually, the Walnian and Bungu operations have recently been divested, and so now they're roughly a third between Senegal, Burkina Faso and Ivory Coast. So straight off the bat, there's quite a bit of risk with this stock because they're operating in very risky places. And here we have a map of their exploration and development projects as well. And you see that their main development projects are in Mali and Ivory Coast, and they have a lot of exploration in Guinea, Ivory Coast, and also Burkina Faso. And I've gone onto Wikipedia to look at the stability index of basically what are the most unstable countries in the world. And we see that Mali are number 13, Guinea number 14, and Burkina Faso at number 21. So being no doubt, these do operate in risky areas. The plus side of that, of course, is that their all-in sustaining cash cost is less than $1,000 an ounce, which is much lower than with a lot of the oil majors. So their net assets are less than their market cap, so that makes them look reasonably priced. And then when you factor in the reserves, they really do look cheap. And their resources here at 16 billion also look very impressive. Now here's Barrick Gold for comparison, and you see that Barrick Gold are also fairly nicely priced. But on paper, Endeavour Mining look even better value. But of course, some of that is factoring in the risk of where they operate. One thing to say is that their production, though, actually reduced from 1.4 million ounces in 2022 to an estimated 1.1 million ounces in 2023. And having looked into them a bit, I can say that a lot of their current portfolio is now kind of in decline, and they're in a situation where they're having to invest money in developing new projects in order to keep future growth in their production. And they actually hedge a third of their production, what they call this gold collar, which is a mixture of put and call options to guarantee a certain price for their future production. And this is because they say they're in a construction phase. So they're having to invest a lot of money in upcoming projects. And I always kind of look at it as a bad thing where you're having to hedge your own production, because otherwise you could get into trouble given the future investments that are required. He listed on the FTSE in 2021. And ever since 2022, they've been doing over 277 million in share buybacks. Although I should say that those share buybacks have started to tail off in the last year. 2023, they divested the Bongnu and Walnian mines in Burkina Faso. That's these two here. And they got 130 million for that up front. Plus 170 million will be coming in future kickbacks. And of course, there was massive news only last week when they abruptly sacked their CEO for making a irregular payment of 5.9 million. Now, I'm sure some people might be thinking that, well, actually nothing's materially changed at the company in terms of the gold that they have. So this 10% drop in share price since that news could offer a really good opportunity to buy. Myself, though, I'd point out that, this guy's been sacked for this thing, but it makes you wonder what other skeletons are in the cupboard. And here, ever since their IPO listing in 2021, we have their share price against the orange line here, which is the price of gold. And we see that generally the share price has just tracked the price of gold. Then, especially with the recent decline, they're now actually 18% lower than when they listed, whereas the price of gold is 15% higher. They're looking at their numbers, and the revenue seemed to peak in 2021, and it dropped to an estimated 2,047 million in 2023, to my own estimates based on looking at their Q3 data. So we've got to accept that there is a decline in their revenues, and that's actually because of a decline in their production. Now they're going to get a 130 million boost in 2023 for those divestments. The operating expenses seem under control, as does the depreciation and depletion and the royalty payments, and also the corporate costs seem quite well in control. Now what's a bit unfortunate is we have these impairments of mining interests, which are large numbers and very noisy, going all over the place from year to year. And in 2022, there were actually impairments for the Bongu mine and the Wagnian mine for 163 million and 197 million respectively. So again, you get this flavour of there being quite a lot of risk in a lot of their portfolio, and the fact that they've got very noisy impairments every year, which makes it hard to get a good grip on what their net income should be. In 2023, though, it appears thus far there won't be any nasty impairments. So if that's the case, we kind of get to see how they kind of should be in an ideal world, with perfect valuation of their assets. And there they look like they should be bringing in about $250 million every year in net income. And here I have their net income history, and actually if you take account of those impairments, it's probably like a flat trend really. But we have to accept that even though there's a widening there between net income and expenditure, there is this general trend of reduced revenues from reduced production. So a nice build up in their assets. Their net assets tend to be at about 4 billion, and lots of cash, 0.6 billion in cash. However, that's reduced somewhat over recent years. And the other current assets typically are, in this example, 300 million of inventories, so that's gold that they've mined, that they're ready to sell, and also trade receivables of about 100 million, so that's gold that they've sold, but they're just waiting for the money. Their debt actually increased to 1 billion in 2023. So they have a 645 million revolving credit facility, and their current debt, it consists of 535 million drawn from this revolving credit facility, plus 503 million in senior notes. So they are having to take on nasty debt, and they've said that this is obviously for future mine development. But that takes me back to my general observation is that this company isn't really fully established. They've got very impressive assets at the moment, but they're trying to step up into a senior gold miner with future development work. But this means you've got to accept that they're taking on debt and spending a lot of money in the next few years. It's notable that with their share buybacks, they've actually reduced in their number of shares on issue. And when I look at the profile for them, they look very good. You know, they look very cheap here on paper. They've got a price to book of only 1.2. We notice the debt kind of creeping up here, but this is a very good profile. When we stack it up against their reserves, they look very cheap on paper. So that completes my video for Endeavour Mining. They are really cheap, and they look very well priced. I was kind of tempted to start going in to spend more time on them, start going into each of these countries to fully assess the dangers there, because they do look very, very cheap compared with some of the Canadian companies I've been looking at. In the end, there is risk here when you're dealing with these kinds of countries. The fact that they're currently in flux, where they're having to use lots of debt to future grow the company, that kind of puts me off a bit. So then I wasn't so sure. And then the final straw really is their CEO being sacked. Yeah, maybe now's a great opportunity if you're a risk taker, but for me, there's kind of already enough risk here. So I don't like situations where you're adding another risk onto these already existing risk factors. That profile really isn't attractive to me. So I'm going to look elsewhere for my individual gold investment. So I hope you found this video useful and wishing you a good weekend.
I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.